Secretary of the branch, C. Anirban Pal, my dear MC committee members, and all past chairmen, and my professional colleagues. And I welcome Sri V.S.Sudhir to today's webinar, because this is the first meeting of this year. So it is very, very grateful to Sudhir Garu, because he has accepted our invitation, and really it is our opportunity and great, really wonderful, sir.
My pleasure, sir. It is my opportunity, my luck that I'm doing the first one. But I'm sure this time I'm going to come and address in personal also this year.
Sure, sir.
Yes, sir. You missed in my tenure, sir.
Correct. I have to make that good.
My dear professional colleagues, and all ladies and gentlemen, a good evening to all of you. And my immediate past chairman, Sri S. Murali Krishna Garu. Really good evening to all of you, sir. Because regarding the GST, you know, and all people know, there are a lot of sea changes are coming in the GST. Because the GST has been a remarkable tax reform of India. Though it is less than 5 years maybe, there are so many changes in this act, and there are so many amendments. Because time limit for claiming ITC, restrictions on ITC availment, non-resident taxable person, cancellation of registration, reversal of ITC with interest, time limit for issuing the credit notes, and filing of GSTR 1/3B, refund of supplies to SEJ, withholding and deduction of refund, transfer of balance in the electronic cash ledger, changes relating to GSTR 8, interest on ITC wrongly availed and utilized. Really, it is creating repercussions in the business all around the country. It has become a game changer and a highly discussed reform. As we are aware, Finance Bill 2022 has proposed a very few changes to GST law, but the effect of which is mind-blowing, both in positive and adverse ways. The interest leviable only on ITC availed and utilized is a welcome move, and at the same time, the proposed amendments leave the recipient to the mercy of the supplier. For the detailed discussion on the proposals of the Finance Bill 2022 and the other latest changes in GST, we have one of the well-known and renowned speaker in indirect taxes, CA V.S.Sudhir Garu, who is a partner of Messrs. Herikenge and Associates. With these remarks, I request Sri CA V.S.Sudhir Garu to welcome this webinar. Before going to take up the class by V.S.Sudhir, I requested G. Vasudeva to introduce the speaker. Vasudeva, please. Unmute Vasudeva, unmute.
Good.
Unmute avaledu. Okay.
Hello.
Okay.
Good evening, delegates and my dear members. Mr. Sudhir V.S. is qualified as a BCom LLB and FCA, aged about 38 years. Is a core partner of Herikenge Associates and heads the Hyderabad branch, which provides consultancy, audit, and litigation services in indirect taxes. His schooling and graduation in Bangalore, qualified as a chartered accountant in 2006. He done his internship in development program in India Institute of Management, Ahmedabad, IIM Ahmedabad, and LLB in Osmania University. He has contributed various articles for professional journals, institutes like Institute of Chartered Accountants of India, Institute of Cost Accountants of India, and trade journals, Service Tax Review, and Manufacturers. he has presented papers at various branch of ICAI, ICSI, and ICWA. Master training for ICAI, New Delhi, and faculty in National Academy of Customs, Excise, and Narcotics, which train the developmental officers. Presented papers in various trade forums like Ashocham, KSCAA, FAPCCI, YIAP, Plastic Manufacturing Association. Been a visiting faculty at Oxon Business School, BITS Pilani, etc. He has joined another 4 books on GST and service tax for a national which are practical guide to GST on real estate published by Bloomsbury, GST tariff by Bharat, which is published by Bharat Law House. He was a part of the Hyderabad study group on GST formulated by ICAI and contributed for the preparation of background material on GST for training the CBEC officers. He has presented papers on GST in various forums. He is a management committee member of FTCCI, co-chairman of Indirect Tax Committee of FTCCI, and a past member of Regional Advisory Committee of Central Excise and Service Tax Department, Hyderabad. With this introduction, I'm introducing a speaker and handing to Mr. Vasudeva Murthy, Chairman of Visakhapatnam Branch, SIRC.
Thank you, Vasudeva Garu. Now, attention to today's speaker, V.S.Sudhir Garu. Sir, Sudhir Garu, the floor is yours.
Thank you, sir. Thank you, Vasu Garu, for my for my wonderful introduction. So I hope I am audible and my screen is visible.
Yes, sir, you're audible.
Perfect, sir. So the topic which has been allocated to me is to give the recent updates, including the Union Budget 2022, which has been happened from the indirect tax perspective. So that is what I'll be taking you through today. We shall also understand how the budget approach is all about. So how the things have been going as far as the changes in the taxation regime is concerned. What is the approach has been taken? We will have a small overlook in that. Then we will look at understanding what are the changes in GST law, customs, and central excise. Customs and central excise have kept it very, very short, only to the basic understanding which we should be aware. That only I'll be taking you through. Then we will also be going through discussion of few recent decisions under GST, which is of important that we as a professional, we should be aware of. So this is how I have planned my session, and I'll be keeping sufficient time for the question answers. It's not that we are going to take the questions at the end. So any questions which you are getting as and when I am addressing, you can always use the chat box, put your questions so that you don't forget the questions what is there in your mind. So that helps for us to retrieve and answer all the questions at once. So this is something which is the coverage for today. So let us see how the budget is going on. So you may be aware that when the pre-GST era, the central excise, customs, and also to some extent of service tax, the budget was very, very important for a businessman. Why? Because the budget was being proposed on 28th of February, and the changes used to happen on 1st of March. Midnight of 20th February, the changes used to happen. And there is going to be a lot of changes in the rate, lot of changes in the procedure, various things would have been happened. So businessman, there was a lot of panic which was happening when the budget was coming. There are few people who stocking in anticipation that the rate is going to come down. There are few people who are stocking or selling off because of the rate being increased. So there was a various debate and there speculations which was happening. And budget used to be a very, very thing sought for any businessman. But of late, if you look at, once the GST has come, the lawmaking authority has been a GST council, and there is a very less thing for a parliament to do there. So although the parliament only will pass the bill, I'm not saying the parliament is been taken away from doing this particular power. I'm not telling that. But what has been to tell is that the entire proposal comes to the council meeting. The minutes of the council meeting or the press release has been already released, and they make a recommendation for changes in the law. So more or less, we know what exactly is going to be happening as far as the budget is concerned. The entire rate change is not been taken to budget at all. The rate changes has been managed within the board itself, and not getting into the alteration of the in the law. So thereby those sort of a speculation of waiting for the budget 1st March, I have to change, do the new billing, do the old billing, and all those things. So all those things are getting disappeared. The rate can change any moment under the GST era, although customs is still having that same impact. So if you look at the off late, the budget has been there, it is becoming more of a revenue based. So it is more or less, it is becoming one-sided, and they are looking at taking only one example of few people who are working on the what we call the fake invoices, or whatever circular trading we call. So maybe I'm sure the numbers would not be 0.5% or less than 0.5% of the total assessees are involved in this sort of a activity. But the entire person, everybody, 100% of the assessee have been subjected to a lot of hardship. Everybody has been what you call everybody have been looked at upon a doubt, and they have been scrutinized with a closer lens. So this is unfortunately how they are looking at. There has been a lot of revenue targets, high collection pressures which has been given, which is going back to pointing out where the evasion or where they do not have a proper control or powers, which is leading to giving lot of draconian powers to the officers. I'm sure the powers which the officer is having today, if at all he has a vested interest or a bad motive, he can actually take any business for a ride, and he can ensure the business cannot operate. So that is how the powers have been given. Because there are certain powers, if you look at the prosecution itself, which is very serious. Somebody getting arrested is serious. For somebody to be arrested under GST, they need not be proved guilty. If there is a reason to believe to an officer that there is an evasion of tax to the extent whatever is mentioned, 2 crores, 5 crores, whatever it is, he can be arrested immediately. So that sort of a power has been given. So thereby, there could, if these powers have not been diligently used, genuine taxpayers may get trouble, and they will get affected. But the approach has been to being a revenue biased and giving draconian powers to the officer. This is happening on budget. A couple of budget also has we have seen this sort of a thing which has happened. Way forward, there was no much talk which was been there as far as the budget. There was totally silent on whether the electricity is going to be subsumed under GST. What happens to the real estate? The committee has been formed. The stamp duty was supposed to be merged. That has not been there. About 55% is the rate of taxation on fuel, which has not been looked at bringing into the GST at all. There is no talk about in the budget. Are they looking at bringing into the GST at all? Most of you would be aware when GST was introduced in 2017, petroleum products were kept out. Five petroleum products were kept out of the GST for a period as may deem fit by the council. Once they feel that, yeah, this is now we can bring it, they could bring it. So we are almost nearing 5 years, and we would be completing 5 years soon. But still, the petroleum and 5 fuels is not been looked at bringing into the tax net at all. So if at all that was supposed to be done, they should have done an enactment in the Act and they could have bought it. It's not been there. So these are the few things which has not been looked at. Coming to the procedural aspect, we were having a lot of expectation on clarity on the GST tribunal. The GST tribunal at the present form says that there is going to be a 2 technical member, 1 judicial member. So there are going to be 3 people deciding on the matter. So when there is a 2 technical member, that there could be a department biased ruling which is going to come. Considering that there is a stay which has been granted by the Madras High Court, which we were looking at, maybe there is going to make it 1+1 and give a rectification so that they can proceed with the tribunal. That is not has been happened. So we may have to wait for another 2 years for us to get the tribunal. There are a lot of cases which is getting stuck. It has been already passed through the commissioner appeals. As most of you are aware, n number of notices has been issued by the state authorities also on reconciliation and things like that. So there are a lot of notices which has been auto-generated notices has been issued, which has been few have been adjudicated, few have not been adjudicated. Once it has been adjudicated, few people have also passed the first appeal. Then they are getting stuck because they don't have the tribunal for them to approach. So this is something which was not been there, and also the National Appellate Authority Tribunal also there is no talk about it. So that was the overview or the approach of the budget was been. Then if you look at the revenue collection, finance minister made a out of the prepared speech and went and made a mention saying that the GST collection is at the all-time high, which we could look at, and the growing numbers will indicate that the lot of crubs has been made as far as your input tax credit and things like that. Is the government getting more than what they are actually due for? So there is no proper accountability there because of irrational denial of the input tax credit may result in an higher amount of amount to be received by the revenue than what they are entitled to. We have to look into it how things will go as far as that is concerned. So now, if you look at the changes as far as the GST, there are a couple of changes which I will be taking you through. Changes which has been done for input tax credit, reversal thereof. There are certain extension of the due date which has been happened. I'll be taking you through the extension. There is also a retrospective amendment for the interest. Very interesting and very thoughtful, which we need to look at certain cases. So I'll be taking you through that. Then we have certain matters of changes which has happened, clarity which has been given as far as the refund is concerned. And there is also a transfer of electronic cash ledger transfer of one unit to another unit has been there. So that is something which we will be looking at. Then you have a returns and registration related changes also. I will be taking you through. Then there is a small retrospective effect we'll be looking at. So let's understand how a journey of input tax credit has been. So the journey of input tax credit, if you look at pre-GST regime, there was a proposal to get something called as a matching concept. In my view, this was the best out of whatever has been proposed and what has been happening. So it was a very simple mechanism where they told that every seller has to do a GSTR1. So that GSTR1 will reflect as in the GSTR2A of the recipient, which gets auto-populated in GSTR2. Now there is a scenario, a person has actually received an invoice, but it is not auto-populating in GSTR2A. He had an option to upload that in GSTR2 based on the invoice what he is having. And I could have gone ahead and taken the credit. Remember, in GSTR2, you should have proved the credit on a line item basis, no summary. Because everything came from GSTR2A, or you have inserted your own credit. Because of that, line item credit was being recorded. Now, when I have done this GSTR2, I have uploaded an invoice. This was getting auto-populated in 1A of my vendor, and that gets auto-populated into 1. And thereby, he is being forced to upload that particular return. So that way, I would have ensured all the people who are not doing, I could have put it in my GSTR 2 and I would have got the credit, the due credit. For some reason best known to the department, they deferred this entire scheme. They made the entire provision inoperative, except continuing GSTR 2A. GSTR 2A still was continuing as an informatory thing and not having any law that the GSTR 2A, when it is there, then only you have to take a credit. In 2019, they bought a small restriction which was provided by Rule 36(4). The restriction told that the credit could be taken only to the extent what is there in your GSTR 2A with a buffer of 20%, which was later reduced to 5%. But remember, this rule did not have a legal backup. So even in 2019, whatever the restriction which was there, which was not legally correct, they got this legal backup only in the Finance Bill 2021, and which got into effect only from January 2022. So that is where they bought the GSTR 2B. They made a condition under 16(5) and they told the credit will be available only if it is there in GSTR 2B. So January 2022 up to January 2022, you would have been availed, you could have eligible to take the credit if you have a valid invoice, you have received the goods or services used for the purpose of business, you have paid for it. It is not specifically restricted. You were eligible to go ahead and taking the credit. Nobody could be restricting up to January 2022. When I say nobody restricting, I am not saying the department cannot give you a notice. Department will certainly give you a notice, but you have 100% chance that you are going to win the case unless until there is any specific amendment which may come to overrule such decisions. So why I am telling this so much is because most of you would have already got this particular notice, and you would have been giving a reply or being somewhere, or some people would have been paid also. So nothing to panic is something which is the message which I wanted to give as far as here. So all this has been a journey from January 2022, cutting short. January 2022 onwards, you will be eligible to take the credit only when the amount is reflected in your GSTR 2B. If it is not reflected in your GSTR 2B, there ends the story, you don't get the credit. Clear? So now what is new which is happening is that despite of being under GSTR 2B, the government is not able to curb some malpractices which has been done by few taxpayer. So to tap them, they have proposed a new condition over and above that the amount should be there in your GSTR 2B. The challenge what was happening hitherto was that how an entry will come in my GSTR 2B. The entry will come to in my GSTR 2B when GSTR 1 is filed by my vendor. The moment the vendor is filing GSTR 1, it will come under GSTR 2B. Now GSTR 1 is not a tax paying returns. It is only a summary of the sales assessment. When you are making a summary of sales assessment, it need not be that the amount has been paid to the credit of the government. In the previous amendment from January, they brought a new provision where they told if there is a difference between GSTR 1 and there is a difference between 3B, that is you have over declared under 1 and less declared under 3B, then there could be an auto recovery of tax without issuing a show cause notice. Point well taken. But again, there is an efforts of the department there, not your efforts. They also introduced a provision where they're saying that you will not be entitled to upload GSTR 1 unless until you have uploaded the GSTR 3B of the previous year. So here what was happening is that initially people were uploading only GSTR 1, keeping their 3B open. So client was getting this in GSTR 2A, he was clearing the payment, everything was clear. When they were subjected to audit, client was showing, see, it is coming on my 2B and 2A or 2B as the case may be, and I fulfill the condition and you cannot ask me to reverse the credit. But department did not get the money. Then they told that GSTR 3B has to be uploaded, then only next month one can be given. So GSTR 3B was uploaded by the people with showing less turnover than what is there in 1. So now this new condition is saying that if the GSTR 3B has not been uploaded, or it has been uploaded and there is a difference between GSTR 1 and 3B more than the prescribed limit, maybe it is the 10% which we are anticipating. If it is more than the prescribed limit, to that extent, your recipient is ineligible to take the credit. So what my assumption is that we have to wait for the rules for the clarity, which is going to come after 6-7 months. Of course, this provision also will come after 6-7 months to if operative. So what my view is that, say, for example, I'm your vendor. I have a liability to pay 10 lakh rupees of GST liability I have to pay, but I have uploaded my 3B with only 3 lakh rupees payment. I have uploaded my 3B. So what is going to happen? All my customers, say I have 10 customers along with you, all the people will be eligible to take only 30% of the credit and balance 70% will be shown in the GSTR 2B as an ineligible credit. So only to the extent of 2B, which is eligible, to that extent only you will be eligible to take the credit, and the balance you will be ineligible unless until I make the gap good. So this is one condition which they have introduced. Now there were second smart people, they were doing, okay, first I avoided doing GSTR 3B, then I made GSTR 3B, so there cannot be a difference. So what people did is they inserted dummy credits. So, okay, what I'll do, 3 lakhs is actually the credit or money which I'm having. 7 lakhs is dummy credit without having any invoice. They inserted a dummy credit and they uploaded GSTR 3B where both the amounts got matched. Then it cannot be denied for my customer. Nah. So there also they are saying that if the vendor has paid, your vendor, that is Sudhir, is paid the amount from a credit which is not appearing in his 2B, then to that extent, you will not be eligible to take the credit. So that means to say, all these days I was chasing my vendor only for two things. What is that? One, I was saying that, boss, please upload your GSTR 1 so that it will reflect in my 2B. Second, upload your GSTR 3B. I was only bothered about these two. Now I have to chase and look into it whether 1 and 3B has a difference. Not only 1 and 3B has a difference, whether his credit, was it found under 2B or is he taken any dummy credit, that also is my responsibility to ensure that the credit has been taken after correct credit has been taken by me. So this is what the new conditions they have been talking about. In addition to that, they have also put that if there is a new registration which has been taken, up to a certain period, recipient will not be eligible to take the credit from the invoice issued by the new registration. Now, what is that period? What are those scenarios? We have to wait for the law. There is no clarity on that, but this is what has been proposed. Then they are looking at this 3B. So these were the few things which has been there. The new condition of section 38, which has been talking about, that 38 makes me entitled for credit if I'm not doing all these things which I just explained to you, and if I am a person where I have been notified that specifically prescribed, then if I am that vendor who am specifically prescribed, you will not be eligible to take the credit. So this is the new conditions which has been there. There are certain legal issues which has been there. One biggest confusion which is coming as far as this is concerned is that, Sudhir, you tell me one thing. What you are saying is that, okay, my vendor has to upload GSTR 1. He has also have to do GSTR 3B. That 3B should not have a difference, and that 3B should not contain credit more than what is there in 2B. Well, all is good, but tell me one logic that for me to take the credit for the month of, say, January return, GSTR 1 of my vendor would be uploaded by 11th. So 13th it gets auto-populated to me, but due date for him to file his GSTR 3B is 20th. But how it will come in my 2B returns, what is eligible, what is ineligible, because 20th is not at all elapsed. So that is a challenge which has been there. So section 41 also been amended, where they're talking about that, okay, this month you take the credit based on your 2B, which has come, but next month 2B, if something has been reflected as ineligible pertaining to the last month, you have to reverse it along with the interest. So there is going to be a huge follow-up, huge mechanism which you have to look at on an each invoice level basis, as to what is getting satisfied, what is not satisfied, whom to follow up, whom not to follow up. So there are a lot of challenges which is been coming here. So ITC to be availed only on the GSTR 2B, which I have talked about. This is the entire concept is against the seamless credit. If you look at the entire GST proposal which they had come, the main agenda for the GST to being introduced was having a unified tax. Second was to remove the cascading effect of the tax. So now, because not giving these sort of a credits, the cascading effect of the tax has been increased. The seamless flow of the credit which was promised when the GST was supposed to be introduced is going away. So that is becoming a challenge. Another questions which is coming here is that the responsibility of supplier compliance on the vendor is doctrine of impossibility. So how I can ensure my vendor compliance? So is it possible at all? So can I say it is impossible to comply what has been asked? Any condition which is impossible to be performed need not be performed. So can I take that particular stand? Is the another question which comes up here. So recovery from recipient before recovery from the supplier. So this is another thing which council minute also had considered. They are told that you don't go to the assessee, the supplier, the recipient of the credit on a normal course. You go to him only when you are not able to trace the seller, or you are able to trace the seller but you are not able to recover the amount, then only you go. So this has been there in the GST Council. No law has been brought out, no circular has been brought out, no notification has been brought out, even though it has been clearly minuted in the meeting. So there are n number of decisions which has been there. I think LG Industries or electrical something was there as far as the Kolkata High Court. They have made it very, very ample clear that as long as a genuine transaction has been happened, you cannot deny the credit only because the vendor has not made the required compliance. But this latest amendment also is putting more burden on the vendor, on us to follow up on the vendor to do his compliance. So whether this has to be looked at as an exceptional cases or it has to be matter of routine is something which is not very clear. So this is something which we need to wait for certain clarity. Now let's look at what is the impact on the business because of this. The greatest impact on the business is that I anticipate there is going to be a huge reduction in the input tax credit which will be eligible. The reasons could be multifold. One is that the vendor is not filing his returns, or he has filed his return, but down the line, that particular vendor has not uploaded, and thereby this person is not eligible to take the credit, and he is not able to pump in that particular money. Then there is going to be a huge cash crunch which is going to happen. The entire credit mechanism where I was getting 100 either two, because of this new provision, it may reduce to 60 for everybody in the chain. So that could be a huge impact, and every default of the vendor is going to cost to us. So it becomes very, very important for the vendor screening and vendor grading. Very important, that has to be looked at. You will not be afford to able to deal with a vendor who is not compliant with the law. So that is that has to be very, very clear. So more of vendor education, vendor grooming, vendor monitoring. There has to be a separate team which is going to be looking at it. Vendor grooming and training is something which may have to be looked out. It has an impact on the cash flow, which I have discussed. And very important is that what is your PO or agreement, that also requires a modification. Now the PO should specifically tell that the GST would be paid only if all these conditions have been satisfied, then only it will be paid. And after paying also, by chance, if it is not been allowed to me, then that same has to be recovered with you along with that interest and penalty what I will be paying to the department. So that is something which has been required, and this requires more time and cost in the vendor communication. This will tremendously increase the cost and the time when the communication is being made. So these were the changes as far as the new condition of ITC is concerned. There are certain other changes which has been there, as I was talking about section 2041. It talks about doing away with the matching concept. I talked about my history of the credit. I started with where the proposal was there. So there was a proposal of doing a matching concept, section 41, 42, 43. So all those conditions have been done away with. There is no question of this coming back at all. So that has been done and dusted for life. So with the existing system of GSTR 2B, GSTR 3B is going to be regularized, and that is what is going to work. The line item wise credit, the line item wise restriction, rejection, acceptance is not going to happen at all. That has been removed. ITC would be liable. You had in case the provisional credit has not been there, you are liable to be reverse the credit along with the interest, and you will be eligible to retake the credit as and when the credit has been made. So that is one thing which I had explained, saying that month 0 you will take the credit provisionally. Month 1, when you get to know that section 38 has not been followed by your vendor, then you have to reverse along with the interest for 1 month. And once that compliance has been done by your vendor, you will be eligible to retake the credit. So that is something which has been there. Mechanism for such ITC reversal and re-availment to be prescribed. So how are you going to re-avail? What is the procedure? That is not been there. So the law powers has been given to the rules to make such procedure, which we need to wait and watch only after the enactment. No invoice-wise breakup of liability paid by the supplier are available now. So that is what I am saying. Still, it is a gross level. So invoice-wise credit uploading is still not been available. Section 16(2)(c) vis-a-vis this amendment, we have to look at whether how the new condition will be coming within this thing is something which we have to watch. Then there are certain changes which has been prescribed when is that is pertaining to the time limit is concerned. Most of you would be aware that for me the last date for taking the credit is the 30th September of the next financial year. No, not 30th September. It is a due date of filing the September month return was the last date for me taking the credit. So that was the law which was been there. That is not the first date for you to take the credit. That's the last opportunity, last date for you to take the credit, input tax. Now, this due date for filing the returns of the September month of the next financial year has been amended to 30th of November, not only in case of input tax credit, it has been done for credit note amendment of GSTR 1 and 3B and also amendment of the TCS returns. For every cases, this particular amendment as extension has been made to 30th November. So there are certain questions which has been arising is that Sudhir, why 30th November? There is no much logic except for maybe 30th November is the last date for doing the tax audit also. And they want to give an ample opportunity for completion of the tax audit so that they can take the credit of something which has been missed. So that could be one of the reasons if you look at. Second thing which you look at is that, yes, there is some extension, which is a welcome move, which I can say here. But if you are looking at a deeper question, the question which is coming up is, Sudhir, do you mean to say that I have time till 20th of December to take the credit? Because November month credit, whatever I've taken, I will disclose this on in 20th of December 3B. So technically I have time till December return. So this is again having a gray area of interpretation. My view is, yes, you are supposed to take the credit in your books of accounts by 30th of November. The assessment of what you have taken happens on 20th. So thereby, even on if you have taken it on 30th November, on 20th of December, you will be able to go ahead and claim the returns. But there is another school of thought where it says no, taking of credit can happen only when you have uploaded your GSTR 3B. Till then, you have not taken the credit at all. So for availing the credit, you have to upload the 3B. So 30th November, if it is the due date, then the 3B file should have been filed before 30th November. So November month 3B, you cannot file on 30th November. Can be maximum filed on 1st of December. So thereby, technically, the last date for taking the credit is in the month of November 20th only. That is your October month only. But 20th November is the due date. So this is again a subject matter of interpretation. My view is that you should get a time till 20th of December. There has been a decision of Bharti Airtel in Supreme Court, which I'll be taking you through, where they have emphasized that the returns is something which you have to do and you cannot compromise. 3B is a valid returns. So those sort of things has been told. We will look into it, that judgment when it comes. But that is a question which has been haunting many people. But yeah, there is a view which is possible. To be conservative, not for the dispute, to be conservative, advise your client saying that, sir, 20th November means October returns only, you will have to take the credit, whatever it has happened, not beyond. So that means technically I'll get a month extra, that's all. That too, this is after enactment. Now, when is this going to enact and will be notified? That may not be get notified for the returns which is going to be filed for 22 financial year. Maybe this will be useful only for 22-23 financial year, because last year budget enactment, the cutoff date came from the January 2022. So this year also, if you're taking the same date, it will come on January 2023, and thereby this will be used for the financial year 22-23. Your 21-22, still you have to take it before the due date for taking the filing the returns for September month return. So this is the same thing for issuing the credit note or your amendment for GSTR 1 and 3B. So everywhere this same provision is going to apply. Then there is a changes which has happened as far as the interest availed and ITC availed and utilized, interest on that has been there. So most of you would be aware that ITC concept, there are two things. One is an availing of credit, second is an utilization of the credit. Utilization is only when you are using it for the payment of your output tax. There is a time limit for availment of credit. There is no time limit for utilization of credit. So these two are totally an independent concept altogether. So there was a thought process that the there was a provision, not the thought process, sorry, section 53, there was a provision under the GST Act which talked about where a credit has been taken in excess than what you are there, or you have reduced the output liability more than what it could have been, then you are subjected to an interest which will extend to 24%. That is what was there. So department was interpreting, whenever you have taken an erroneous credit, the interest to be paid is 24%. But if you see the existing 53, it is very clear that it is not having any, it is having a link only with 41, 42, which is not at all operative. So that entire matching concept itself is not there. So thereby you need not get into it. That was very, very clear. But they were going ahead and collecting erroneously availed and utilized credit. So to make good what they have been doing, now the law has proposed a retrospective amendment where wherever you have availed, wrongly availed or utilized without any reference to any section 41, 42, then you will be liable for an interest which can go, you will be liable for an interest which will be notified, which can go up to 24%. And the notification has been amended to reduce it to 18% with a retrospective. So sum and substance from 1st of July 2017, whenever this gets notified, any wrongly availment and utilization of a credit, you will end up paying 18% of interest on that. What if you have not paid interest in the past? You have to pay it now. There is no interest on interest. What if I have already paid 24% interest, but retrospective amendment says 18%, you can go for the refund of the balance 6%. In my view, there is no time limit for claiming a refund of interest. The time limit is there only for the taxation purpose, tax. So in this case, for interest also, you will be able to go for a refund. So this is on the interest. We need to wait for the retrospective amendment to come for this. But in between, because it's payable, you may end up paying for it, but you could wait for the cutoff date to pay because there is no interest on interest. You can always wait. So that is the wrongly availed and utilized credit. Then there is a linkage of GSTR 1 and 3B. So this I was telling that this rule was already there in place, but it was not been given a power by the act. So most of you are aware that there has to be an act, Parliament has to enact an act, and the state legislatives have to do. So once the act gives a power for the board can prepare a rule for restricting or whatever, providing whatever the condition as may be deemed fit. The power should be there. But in this case and many other cases, the power was not there. They made the rule first, and after making a rule, now they are making a law for enabling that rule to work. So this is one such amendment which they have done, where they say that the GSTR 1, if you are furnishing, if you have not furnished for the previous month, this month GSTR 1 and 3B both cannot be there. Last month 1 is furnished, 3B not furnished, this month 1 also cannot be done. So sum and substance, you whatever returns, if you are missing 1 and 3B of the previous month, next month you will not be eligible to file any of the returns. So that is the change which has happened as far as the returns is concerned. So this takes it to more of a thing that we need to be more clear, that we need to be more diligent in filing the returns, and we cannot afford to go for a delay in filing the returns. So next is the certain changes as far as the refund provision is concerned. So one is an electronic credit ledger. There are two things which has been there. There is an one is that this is again another provision which was not there in the law but was there in the practice. Now the law has been made to make in line with the practice. So one such provision is the refund of electronic cash ledger. So the provision which stands today says that the moment you are uploading your GSTR 3B returns, which shows the excess payment of tax, if any, that amount is payable to you default transfer without any questions asked. But that is not what is happening. In practical, you have to apply in RFD1, and then you have to go for an adjudication, and the refund is going to happen. So now they have proposed a law which is nothing new from a practice point of view, but the law matches the practice. So any excess electronic balance in the electronic cash ledger, you have to go for an RFD1 procedure. Adjudication procedure has to happen, then only the amount will be paid. So this is a bit more weird, and we have to be very clear that there should not be any sort of an unnecessary proving and documentation. So there has to be a circular or something which will clarify certain things is what we should expect here. So they have given an extension for filing of returns for UNO and other organization, which was earlier 6 months, that has been extended to 2 years. That is another amendment which they have brought in. Withholding and deduction provision has been extended to all the refunds. So what is this withholding and deduction? So two powers which they had. One was that in case you have not uploaded the returns, any returns, they can withhold the refund till you file your returns and regularize, then only they'll give you a refund. Because if there is any liability, they don't want to pay. Second provision was the deduction. So if there was any amount due which is not pending in an appeal, if you are eligible for a refund, whatever the amount which you are due, that was reduced and the balance was paid. So that particular provision which was there, that was applicable only for 2 cases of refund. That was export and inverted duty structure, export and inverted duty structure. Now there, irrespective of the type of the refund, this is going to apply for everybody. So that is the new provisions which they have brought in. Then there is an SEZ related thing. They have brought a relevant date for when a refund for the supplies made to SEZ can be made. There was a confusion whether it need to be treated as an export or an accumulated credit refund. There was a lot of challenges which was coming in. So what they have done is that they have told in which month invoice you have done, the due date for furnishing the returns in the month which you have supplied to SEZ. From that date, your 2 years is going to be counted for the purpose of time limit for going for a refund. So these were the few things which is more of a clarificatory and more of a confirmatory amendment which was been there. Then there is another provision, which is an interesting and a welcome move provision, which is a transfer of amount from an electronic register. So earlier you may be aware that when I make a remittance, I have to make a remittance for CGST separately, SGST separately, IGST separately. And every remittance for each GST number which I'm having for the same company, if I'm having a multiple units across various states or within the states for various place of business, I have taken different registration, then only I'm going to take this advantage. Then only I'll be able to do this. So now what has happened here is that what provision earlier was that if I have made a remittance for CGST, SGST, but liability appears to be on IGST, I was supposed to again remit IGST in my cash ledger, use it and go for a refund of CGST, SGST. This was rectified in the previous budget. Then they told, no, if CGST, SGST balance is there, why you want to pay again? You can transfer that CGST, SGST to IGST, which was a welcome move. But the question came up is that my own company, same PAN number in Visakhapatnam, and my own company, same PAN number in Hyderabad, are having two GST registration number because it is two different states. So now if the amount is laying in Vizag, can I use it for the payment of Telangana? They told no earlier. Today they are saying yes, that is also possible. If it is same PAN, transfer the liability. Only one condition, when you are transferring from Vizag to say Hyderabad registration, there should not be any unpaid liability in that particular registration where you are transferring. So if there is no unpaid liability, you can transfer the credit. This transfer also will be treated as a refund. So that is what they have looked at. Then they have looked at some certain provision for cancellation of registration for the what you call composition dealer. The registration could have been cancelled if you are not filing your returns for 3 tax periods. So returns also was supposed to be done on an annual basis. So 3 years, if you have not responded, then only they could have gone for cancellation. Now what they're saying is 3 months from the due date, if you are not there, then I can proceed for the cancellation. I cannot wait so far. And for other taxpayer, other than the composition, the returns could have been they are done. If 6 months they have not filed the returns, they could have gone for a cancellation. Now what they're saying, such a period as may be prescribed. They're taking this to the power to the board to decide what that particular period has to be there. Then there are certain retrospective amendment which has been given. One is a exemption which has been given for the byproducts which has been generated during the unintended waste generated during the manufacturing of the fish meal, other than the fish oil. If something has been there, then that exemption has been given up to 30th of September 2019, because after that it was exempted. From 1st of July to 30th September, they have given a retrospective exemption. So that is if at all you have paid any amount, you will not be eligible for a refund. The same is with the liquor license granted by the state authority. The state authority, if it is giving a license for serving the liquor, so that has been treated as a supply of service by a government, and the recipient has to pay the tax under reverse charge mechanism. This was given as an exemption from 30th of September 2019, but department were still insisting on paying prior to that. Now they have given a retrospective amendment, and 1st of July 2017 onwards, nothing to be paid. But whatever you have paid in the meantime, that is gone as far as this notification. But in my view, what has been paid is not a tax at all. It is not at all liable for tax, and that should be eligible for a refund. To be exempted, it should be first taxable, because it is not a supply which has been done by the government authority. It is a permission which has been given, more of a statutory powers which has been there, and thereby this particular levy should not be subjected to GST at all. So that is a point which has been available for you if at all you have to look at for going for a refund of that. Then then there is a GST common portal. Other than for e-way bill and everything, they are making the gst.gov.in as a common portal, notifying now. Then there are returns related changes. There is NRTP returns, a non-resident taxpayer. He was supposed to file the returns on 30th of every month. He was supposed to file on 20th. Now they have made it on 13th of next month. Every month of the next month, you have to file the returns. Then the GSTR 8, which is a TCS returns. So that also has been looked at, and late filing fee has been prescribed for the same, which is 100 rupees, which per day of CGST and 100 for SGST, which may extend up to 5,000 rupees plus 5,000 rupees. So this is the changes as far as the returns is concerned. So that completes the budget changes as far as the GST is concerned. So we will also look at the budget changes which is happening as far as the central excise and customs is concerned. Central excise, there is only one change which has happened, where there is an unblended fuel, if it is there, excise duty of 2 rupees has been imposed. So that is to encourage blending, to reduce the pollution or whatever it is. So they are doing this particular thing. So that is 2 rupees is going to be there. That is the only thing. When it comes to the customs, there are few amendments which requires an attention. One is that the proper officers has been defined. DGRI, that is the Director General of Revenue Intelligence. Earlier it was called as a DRI, Department of Revenue Intelligence. That is now Director General of Revenue Intelligence. So that particular associate, that particular officer has been made as a proper officer, not only DGRI, but also the audit and preemptive. So earlier, this DRI people, when the show cause notice was issued in Canon India, larger bench of Supreme Court told that you don't have a power to issue the show cause notice or do the adjudication. So to overcome, to nullify this judgment, a retrospective amendment has been made, and that made the retrospective amendment also says no order or the decree or the judgment given by the court will override this. So now a DGRI is become a proper officer from a retrospective effect. Further, whatever notice issued by him all these days is also valid. So that sort of an amendment which they have bought. So this gives an intention saying that I am wrong. Sorry, I am right. Even if I am not, even if I am wrong, I will make myself. I will make that wrong as right. So that is an approach which has been taken here, making a retrospective amendment and doing whatever things which is not correct also to be made it correct with a retrospective amendment. So this is one thing which is coming. And there are certain changes as far as the advance ruling is concerned. Advance ruling did not have a time limit at all. Now they're saying that it cannot be open-ended without any time limit. Time limit is fixed at 3 years. What is going to happen for already the advance ruling which has been issued? That is going to be 3 years from the date which gets enacted, only it will be valid. After that, you have to again book for it. So that is one change they have brought in as far as advance ruling. And again, earlier the advance ruling, if at all you have filed, you could have withdrawn only within 30 days from the date of filing your application. Now they're saying you can withdraw the ruling anytime during the proceedings. Even a day before pronouncement also you can withdraw the application. So that is the changes of customs advance ruling. Please note, this is not for GST advance ruling, it's only for customs advance. So they have also come up with some valuation mechanism for the certain class of imports where they have a doubt of an undervaluation. They can prescribe additional checks to check that there is no undervaluation which is happening. This was also again was done in past. There were certain court cases which told that you don't have a power to. Now they have made this particular power which has been there. Transfer of intelligence has been happening. So if an audit party or a search or a jurisdiction thing is there, if find out something which has not been paid, then they have to transfer this intelligence to the jurisdictional officer for issuing of the show cause notice. So that is something which they have brought in. They have brought a penalty for data protection, not penalty for data protection. For protecting data, anything against that, they have formed a penalty. So with an imprisonment of 6 months or a penalty of 50,000 rupees for any sharing of the data which you are getting. However, this will not be applicable if it has been shared by or on behalf of the central government. That will not be related. So there were other about rate related notification 350 exemptions were there that has been phasing out, and project import of 7.5% was there that has been proposed to be removed. So that was a snapshot of the changes which has happened as far as the customs and excise is concerned. Now there is a refund of, there are certain case laws which I will be taking you through. This is an important step of important judgment of the VKC Footsteps India, which is a Supreme Court decision. Earlier, there was an High Court decision. This is in a context where I am an into inverted duty structure. That means my output rate is lesser than the rate of GST I am paying on the inputs. The rate of GST I pay on output is lesser than the rate of GST I pay on my inputs. So that is which is referred to as an inverted duty structure. So in an inverted duty structure, when I'm paying 5%, I am procuring not only the raw materials, goods, I'm also procuring various services, capital goods. Both I have paid at 18%, but my output is 5%. So am I eligible for the input tax credit on the services and capital goods also, which is getting accumulated? So VKC Footsteps in Gujarat High Court told, yes, that is eligible. Madras High Court took a totally a different view. Then the matter was referred to the Supreme Court. The Supreme Court has taken a decision saying that you will not be eligible to take the credit of the input services and capital goods. So that is what has been coming out from this particular judgment. So one has to be very clear as to how an inverted duty structure may have to be looked at. It becomes a cost. Then there was a case of another Supreme Court case of Bharti Airtel. In case of Bharti Airtel, because the ITC was not been reflected in 2A, they were forced to make the payment in cash. Then that was been rectified on a later month and they got it in 2A. Then they told, because I'm getting it in my 2A, whatever I've paid in cash should be eligible for refund. Supreme Court told no refund. GST is a portal only a facilitator to feed or retrieve the information. So if that is not allowing and that is what it is, you cannot go anything about it. So refund cannot be given is what the Supreme Court has told in case of Bharti Airtel. So that is where it makes very clear that even the Supreme Court is looking at the returns and uploading is one of the criteria for us to take the credit or discharge the liability as the case. Then there is another decision which is there in case of App and Co, which is on this whether a GST 3B is a return or not. So there it was finally held that the GSTR 3B is a return, and there was also a amendment in the law to make GSTR 3B as a return. Earlier decision told GSTR 3B is not a return. Now they have called it as a GSTR. They have gone back and made the GST 3B as a return. Another important decision which will be required, normal loss. So section 17(5), if you look at, it's a ITC blocked credit, where if the credit is been, where it has been found the goods have been lost or destroyed or given away as a gift, you will not be eligible for the credit. So in any production, there will be something called as a normal loss and an abnormal loss. So it is not actually found in the end product, but it has been lost during the production because of various reasons, maybe a climate, maybe the process which has been involved. So in case of ARS Steels and Alloys International Private Limited, Madras High Court has held that normal loss cannot come under 17(5), and thereby, even if it is lost during the production, it should be eligible for credit. So it is silent on what happens to an abnormal loss. In my view, also abnormal loss is also a part and parcel of that particular production process, which is not having a challenge, which is not having a doubt that this sort of a thing is possible. Then you should be eligible to take the credit of that. Then incorrection location of the purchaser, UP instead of AP in GSTR1, rectifiable, entitled to avail ITC credit. So here what had happened is that vendor had uploaded GSTR1 with a wrong GSTN of mine, of a different state. So whether I can be eligible to take the credit, they told these are all rectifiable errors. When there is a rectifiable error, you will be eligible to take the credit, is what Madras High Court told. Then you have a very interesting case of Satyam Shivam, which also went to the Supreme Court also, where there was a expiry of a e-way bill was happened and there was a change in route. Then they had asked them to pay the penalty. So this is something which is happening time and again. They told whenever there is a e-way bill has been expired, that doesn't lead to a, it cannot be presumed as a tax evasion and the penalty cannot be levied. And also there was a cost which was imposed on the officer. So that is another decision which is recently which has come out. So there is another decision in case of Comsol Energy, where it talks about a refund, time limit for a refund. So it talks about when the amount which has been paid is not a tax at all, it's an erroneous payment. It is not a tax at all, it is an amount, and thereby your 2-year limitations will not apply. So this came in with the Ocean Freight Mohit Mineral case, where it was held that Ocean Freight is not liable for GST. Once it was held, it is not liable for GST. People went for a refund, but department told boss, it's been 2 years, you are not eligible for the refund. So this Cosmol Energy is in the similar context, where they went and argued saying that what has been paid, it was not at all taxable, and what has been paid should not be considered as a tax, and thereby 2 years limitation will not be applicable. So that is what was there. Then Nipune Bhagat is another decision where it says Senvad credit cannot be blocked in view of recovery of the dues from the supplier. So if there is a dues from the supplier which has to be taken, your input tax credit cannot be blocked because of whatever the due which is to be paid by you. So that is something which has been looked at. The benefits of the extension of the time. So this is most of you would be aware that during the pandemic, Supreme Court gave a sumo motu order, and they extended the time limit for all the adjudication matters, appeals and all those things. So they gave a time limit extension. That was removed. Again, they revoked it. Now that is operational till 20th of February 2022. That is this week is the Supreme Court order is going to expire. So the question came up is whether a refund application also we can take a rescue under this. So in this case of GNC Infra and Sire Supply Chain Consulting, they have told yes, refund application is also a adjudication process, and thereby for that also the Supreme Court order is going to hold good. So thereby you'll be able to take it. So LGW I was referring to is the Calcutta High Court decision, where they told ITC cannot be denied to all the purchases if they are found where they are having a valid documents. Only because your supplier has not paid it, you will not be able to do. Is what they have told. Very, very important and useful decision, I can say. So the Lakshmi Organic says that if there is any technical challenges as far as the portal is concerned, the manual refund prevails, and according the refund to be filed. Refunds has to be claimed online is what they have told. The manual also could be permitted. I think that's some mix up in that. Then Godrej and Bioc Manufacturing Company Limited, they told that the closing balance of education says, SHE says, Krishi Kalyan says he is eligible for transitional credit. That is what they have told, because this was something which was denied by most of the TRAN verification process. So this particular provision says that you are eligible for the credit. If it has been already reversed because of the TRAN verification, you can go for a refund or reinstating application of it based on this particular decision of Godrej and Bioc. Then another widely talked about decision is in case of Greenwood Owner Association. Most of you would be aware that people who are staying in residential apartments and all, there is a maintenance which has been collected. When you look at the entry, they told up to 7,500 it is exempt. The question came up is, if it is 8,000, should I pay on 500 or entire 8,000? Department was of the view it should be on entire 8,000, but this decision has made it clear that it should be only on 500, because up to 7,500 is exempted. Over and above 7,500 only, which should be subjected to GST. So that is what has been clarified, which is a welcome decision. In Evertime Overseas Private Limited, the refund was denied because there was an ongoing investigation was pending. So then they told, if an ongoing investigation is pending, that cannot be a reason for denial of a refund. So the refund can be withheld if the returns has not been filed, or it can be adjusted if there is any tax due. When an ongoing investigation is there, you cannot even withhold, or you can withhold, or you cannot adjust the tax liability because it's not been accrued. So thereby Evertime says that the refund application should not be closed. Next, you have the decision of National Remote Sensing Agency, where the Telangana High Court has been given, where they have told is government entity is not a business entity, so that cannot be subjected to penalties and extended period. So most of you would be aware that there are two provisions under GST. One is section 73 and another is section 74. Section 74 can be invoked only in case of fraud, collusion, misrepresentation and things like that. So this decision says that 74 cannot be revoked on a government entities because they don't have an intention to evade the payment of tax. So that is what is coming out, which is a service tax decision, but can be equally used for the GST regime. So the assessee can be summoned. So FMS education talks about, most of you are people, wherever most of you would have been arrested, wherever there is a search or any doubt which has been there, immediately summons has been given to the managing director of the company. So what FSM education talks about is that the summons can not be restored as a first thing. It has to be there as a last thing. It should be a last resort. First, you have to ask for required information. Then only you have to go for a summons. So that is what has been told, which is again very, very useful decision for all those people who are handling the summons and things like that. So this is another thing where the harassment has been done by the department, where they are blocking the credit or blocking the bank account, freezing the bank account. They say that you cannot leave a businessman in a position where he cannot do the business for recovery of the tax revenue. So all those things cannot be done in a normal course. The freezing of bank accounts or blocking of the credits is something which is been talked about here. So that completes my talk as far as the latest amendments and the GST is concerned. So I am open for questions. Thank you all for patience listening. I thank the ICI Vizag branch for giving me an opportunity to be here and share my thoughts. Thank you all.
Thank you, sir, that you have given broad view and detailed and deliberated detailed discussion on this budget amendments, the latest budget. And because lastly you have said one thing, sir, that the authorities cannot seize the goods also, because sometimes they are seizing the goods. In such circumstances, what is going to happen? In transit, they are seizing the goods.
You have, the only remedy is to go to the High Court, sir. The only remedy is to go to High Court.
Sir.
They're not supposed to do, but we cannot stop them not doing it. So a representation has to be made to the commissioner, and if it is what is happening, then the only remedy is that you have to go to the High Court and get it released.
Okay, sir. But at that time, they are seizing the goods, that insurance is not recovered, sir. Insurance claim is not coming. If they are seizing the goods, suppose if they put the insurance claim, they are not acting this claim, sir.
Correct. So insurance is only when it is lost, no? It is not when it is seized.
I think some of the questions are there in the chat box that we will see, sir. Sir, members, please unmute your mic and ask, sir. Any clarification, any doubts, utilizing his opportunity because he is a master on this subject and expert on this GST. So you unmute yourself and ask, sir, any clarification? Sir, some galaxy, somebody has raised the hand, but now we have got a point, sir.
Good evening, sir.
Good evening, Mr. Suraj. Please tell me.
Sir, can I ask a out of syllabus question? I mean, it is not connected to today's.
No problem, sir.
No issue, sir. Please. Anything to do with GST, to
Oh,
the
thank
best
you.
of my knowledge, I can help you.
Sure, sir. Thank you. Sir, it is regarding a joint development agreement
Hmm.
regarding the tax liability on landowner for the transfer of development right.
Okay.
I find there is no clarity in this regard. I mean, whether the transfer rights are taxable or they are taxable under RCM or they are not at all taxable.
Yeah. So, there are two things. One is whether it is taxable at all. Under service tax regime, we had a certain decisions in case of DLF and all,
Yeah.
where they had made it very clear that transfer of development right is not a supply of service.
Yeah.
Or whatever provision of service under the those wordings, and no service tax was applicable. But the difference then and now is that earlier the definition of service excluded transaction in immovable property.
Yeah.
But today, what is covered under Schedule 3, that is neither supply of goods or neither supply of service, is a sale of land.
Yes.
Now, whether a transfer of development right, is it a sale of land?
Yeah, that is a disputable point.
It is a disputable point. So, if answer is no, then that is not been excluded. If answer is yes, then it is excluded. Irrespective of this, whether a transfer of development right, is it an immovable property? There are a number of decisions they have told that it is an immovable property. It is a benefit arising out of the land, which is also a immovable property.
Okay.
So once it is an immovable property, whether the GST Act itself is empowered to levy tax on that, because that the Constitution entry gives them to levy tax on goods and services.
Yeah.
So whether anything other than goods, even including immovable property, can it become a service? So these are the questions which has been there. So this there was a writ filed in Mumbai High Court, and later I told that it was been withdrawn. So that I am not very sure. But presently there is no judicial proceedings supporting us as far as the GST regime. So assuming for a moment it is taxable, then how it is going to apply? After 1st of April 2019, if you have entered into a joint development agreement, and if it is a residential, for construction of residential you are giving, then it is exempted to the extent of the sale done by the developer pre-OC. That is, whatever the unsold built-up area, that proportionate development rights, whatever is there, that should be subjected to GST under reverse charge by the developer as on the date of completion certificate.
So any JDA entered before 1/4/19 for commercial complex, they are normally taxable at normal.
After 1st of April 2019, no exemption. It has to be paid at 18% GST. But however, it has to be paid at the time of completion certificate. However, the law prescribes the value can be the last sale value. That is the sale nearest to the JDA, which includes land. So you can adopt 12%. That is for after 1st of April 2019. Prior to 1st of April 2019, residential, also no exemption.
And commercial, of course, they are taxable.
Commercial taxable throughout. From 2017 till now.
So,
but after 1st of April 2019, RCM by developer, even commercial.
Yes.
Prior to the direct charge by the landowner.
Yeah, but that is only for the JDA entered after 1/4/2019.
Only after 1st of April 2019, reverse charge will come.
Yeah, yes, yes,
Because that notification came only after 1st of April.
yes, yes. So, sir, to conclude, like for JDA entered before 1/4/19, what will be the safe bet, whether to not pay and wait for the decision, or pay on the safe side and pay on the safe side under protest and then claim refund if any favorable decision comes?
Yeah, to be very conservative, I suggest you pay and go for a refund.
Okay.
Because otherwise interest is 18% and you are saying prior to 1st of April 2019, so it will be a direct charge.
Yeah.
And these landowners in general, in your case, I am not sure, but in general, their main business is not this.
Yeah, it is not. It is an investor only. So.
They are sort of an investors, or they may be ancestral property.
Yeah.
So they may not like that unending long litigation. So make their mind, okay, it has to be paid. If I'll make a refund application, if I get back, I get back. Otherwise, gone.
Thanks a
That
lot.
could
Sir.
be a
Thank
right approach. Thank you, Suraj.
Thanks a lot.
Good evening, sir. I'm
Good evening.
Avinash.
Good evening,
Yeah.
Mr. Avinash. Tell me.
In
Sir,
case of
please
construction service, yeah.
Your audio and video, both, Avinash, I want to see.
With pleasure, sir. Hope I'm visible too, along with
Yeah,
audio.
Avinash, tell me.
Yeah, so in case of construction services, due to percentage of completion method, there is some variance between GST data and books data.
Correct.
In GST 9, is there any impact, sir? In 9C reconciliation,
No,
we
no,
have to
sir.
show that.
You have to
GST
show it
9C,
in 9C reconciliation and try and adjust it with your advances, customer advances account, because
Yes,
that gets nullified there. If it is not happening, show it in O.
Yes, sir, 5O. In GST 9, there is no impact, no, sir?
No.
Yes, sir.
GST 9 will be the day in which you are supposed to raise an invoice or receipt of money. So that only will come there.
Yeah, yes, sir. Thank you.
Thank you, Avinash. Yeah. Prashant Garu, I think you had a question.
Sir, Sachinand Garu. Prashant, you want to ask anything?
Yeah, sir. I have only one doubt regarding how in the GST, sir, how this cryptocurrency or digital currency, in what way they want to create it, as whether it is a complete good or the company which is doing these kind of transactions or made available, they treat it as a service. In what scenario? Because some of my clients, they have started this cryptocurrency, some kind of thing. I want a little bit of clarification.
Sir, cryptocurrency is in a total dilemma when it comes to GST. This particular budget, at least from income tax perspective, they have cleared it as it will come as a part of a digital asset and 30% has to be paid, irrespective of any other deduction and all. They have made it clear. But GST, they are very, very silent. But department is of the view that it is supply of goods, or they're treating a supply of service. So they have given a show cause notice, many show cause notice in Ahmedabad, especially where a normal person like an employee or somebody who has bought cryptocurrency and sold, a trading which has been happened on all their sales, forget about their purchase, on all their sales, 18% GST has been proposed. So department is of the view that 18% GST will come. But there are a lot of gray areas. In my view, should not come. In my view, that it should be an asset. If it is a digital asset, then it should become a goods. Once it is a goods, then when you are making, what will be the place of supply? So place of supply is that when you are making a transaction in the goods, if this goods is there abroad, then it will not be subjected to tax. So we don't know where the server is. Second, even if it is not there, it should be the location of the recipient. So we don't know who is the buyer when you have sold in the exchange. So there are a lot of gray areas. Okay, even if it has to be taxed, what is the HSN entry for cryptocurrency? Because the rate notification under GST, it talks about 18%, not 18% like just like that. Any chapter, it has to be covered under any chapter. If it is covered under any chapter, not finding place anywhere, then it is finding 18%. Not finding place anywhere satisfied. But as it satisfied any chapter, which chapter? There is no classification entry in Customs Tariff Act for the crypto. So there are
Means
n
once
number
the-
of gray areas. Yeah. Go on,
Sir,
Mr. Krishna.
what is my, once the department is given clarification, hope that they will going to, with the retrospective effect, they're going to collect, or from the date onward it's going to collect.
Retrospective may be too harsh. So I am not very sure, but yeah, we can't say. The way it is going, we can't say. But yeah, 18% GST has to be paid, 30% income tax has to be paid, basically. That will not, they want to discourage crypto, basically.
What is the safest side now we can advise client?
Pay 18%, but that is
18% and go
very
ahead.
costly. See, because in a transaction, you may make a profit or a loss. So irrespective of profit or loss, you have to pay 18%. It's not like your income tax 30%.
Correct, sir.
In that income tax, okay, whatever is done now, okay, I think only 70%. Still, I made good money. GST is not like that.
Yes, sir. Thank you, sir. Thank you.
Thank you. Thanks.
Prakash Gar.
May I ask a question?
Yeah.
Yeah, Suguna madam.
Yeah, this is with regards to this cryptocurrency only, what you're digital assets rather. Okay. Now, cryptocurrency, yeah, though it is classified as cryptocurrency in GST, we don't have the option of taxing currency or money, right? There's no provision to tax currency. I mean,
No, what they have excluded is the money. Money is a legal tender, which has been recognized by RBI.
Yeah.
So anything which is recognized by RBI as a legal tender is out of GST.
Okay.
But in case of this cryptocurrency, RBI has not approved anything.
Okay.
So thereby they are saying this is not a legal tender. Because this is not a legal tender, it will automatically attract 18% GST is what they say.
Okay. But right now, the purpose it is being used is only for as a tender, is it not? For the purpose of the business only, as the exchange of money only, right? As means of exchange of.
Not very sure. It again depends upon which currency and all. There are few currencies still now it's not accepted anywhere. There are few currencies like Bitcoin and all has been accepted by few people in few countries like Dubai, Singapore and all. But there are few cryptocurrencies is never accepted.
Depending on the cryptocurrency that we are using or exchanging or mining, depending on that.
Yeah. But major usage as of now is only the exchange. It's only a trading
but
which is happening.
True. But this cryptocurrency has different categories, right? Some people are mining, some people are trading, and there are different aspects to it.
Correct. I agree.
It cannot be classified under 18% categorically as such.
It should not be, but the intention of the government is that they are looking this as a totally different. See, because crypto on a long run is going to be a threat to the banking function. So a transaction between two people gets happened without a bank being involved. So today, if I have to make a transfer to you, then it has to be authorized by my bank, even online, where paper money is not there. But that is not there in the crypto. The transaction gets voiced by the votes many nodes which is there in different parts of the world. So there is a lot of things. So they are not taking crypto on a right way. At the same time, they know the advantage of crypto. That's the reason they are saying that RBI is going to come with their own currency. So they know the advantage of it. They also are not clear that to give this recognition for something which has already been there. And the major challenge is the terrorist and black marketing and
Yes, yes.
mafia and things like that. So that is where the threat to the nation comes. So they're not taking that in a good spirit. If you see the income tax amendment, that will give you the answer.
Okay, thank you.
Thank you, Suleiman.
Sir Prakash Garu. Prakash Garu. Venkat Prakash Garu. You can ask any clarification you need.
Avinash ji has a clarification. Need a
Sach
clarification.
Prakash Garu.
Yeah,
Chairman,
Avinash,
sir,
you can go ahead.
I go? Yeah. Sir, in case of outright supplies completely with RCM, no taxable supplies. In GST 3 be written 3(1)(a), other than ill-rated exempted. Only taxable value we have to show and taxes as nil.
Correct.
In that case, sometimes it is not allowing. So what is the option, sir?
Not allowing in the sense, sir?
To file.
What it says?
When that tax columns are blank.
Yes, you have to make it 0, na?
Okay. Instead of blank, 0. We have to put 0.
Correct.
Okay. Okay, sir. That is the doubt.
Sir, can I ask a supplementary question for the JDA query?
Yeah, Suraj ji, please.
Sir, if we decide to pay the tax, will it be sufficient compliance if I pay on the construction value rather than the composite value?
Construction value, no, sir. This is transfer of development, right? Nah?
So it has to be paid on the composite value?
No. You are talking about payment for transfer of development, right?
Yes,
right?
yes.
So transfer of development, right? What it says is Rule 27 talks about you have to adopt the open market value of this development rates.
So open market value of the flat as a composite rate, including land.
No. Open market value of development right.
Okay.
So that development right, open market value, whether you have to take it the land value or you can VV6 the right value in that, we are not very clear about it.
Okay.
If we are not able to determine the development right value, then only you have to take what I am getting. I am getting flats.
Yes.
So that is having whatever the value which is there, that is having that value, excluding the value of land, because land belongs to me. That has to be taken and the GST has to be taken.
So practically only the construction value.
Yeah.
If from the flat value, if I reduce the land value, then it remains the construction value only.
Correct.
So that will be sufficient compliance, right?
Should be.
Thank you, sir.
Yeah. Any other questions, sir?
Sir, a doubt on RCM.
Yeah, sir, please tell me.
Sir, for financial year 2021.
Sir, please wait. I think he is gone. 2 minutes.
No, please tell me, sir. I'm on my Bluetooth. I can listen. Please tell me. I just went to get my charger. Yeah, go ahead, sir, please.
Sir, Soresgar, please you open your audio.
My audio is open only, sir.
Video maybe means.
Video, okay.
Boliye, Suraj ji.
Yeah, for financial year 2021, the assessee did not calculate and pay the RCM on transportation. His file is written on
2021. 1 minute. 2021.
Yeah, March ending.
RCM liability was not discharged by him.
Yes, not discharged, not provided in the books also.
Okay.
So now the balance sheet the tax was written and balance sheet also is filed.
Okay. Now we want to pay.
Now we are suppose if you are filing the annual return. So what is the option? Should it be disclosed in annual return or we can directly file it in current month's 3V?
Better in GSTR 9 because for reconciliation purpose, again it becomes challenging. Current 3V, you have to show the workings of current year, old year, everything. So make a specific DRC 03 and put it in GSTR 9.
So then we will not be able to claim the input.
You will be able to take the input.
But once we file through DRC, it will be nullified, na?
No. One is output, no, sir. Output you will pay by DRC03.
Okay,
Whatever you have paid in DRC03, you will take it as a line item of input tax credit in the current month, in the
Okay.
month which you have uploaded the GST.
okay, so that both can be
9.
done. Okay.
That can be done, but that is a gray area. What I am suggesting that you can take the credit is a gray area. One school of thought is that 16.4, which gives the time limit, talks about invoice. In this case, you are not taking credit on invoice.
Yeah,
You are taking a credit on the RCM payment which is made.
yeah.
Even for that also, you have to issue an invoice, self-invoice on yourself.
Invoice
So
can
when
be
you
issued in
give
current date.
current date,
Yeah.
what they will say, no, you are supposed to issue on that date. Oh, you penalize me for late issuing of invoice. Huh? General penalty. That's all. It cannot be anything else. So you cannot
Okay.
deny the credit to me.
So I filed DRC3 and claim in current month, then the credit will not match with the GSTR 2B and GSTR 2A.
That's okay. That anyway, that RCM liability will not come in 2B. Sir. That is always subject to RICO.
Right, sir. Thanks a lot. I troubled you a lot.
What I'm saying, assuming this month credit also, RCM liability, it's not populated in 2B. So that's subject to RICO, we can go ahead.
Right, sir. Right. I troubled
Thank
you
you
a lot
so much.
today.
Arey, no problem, sir. My pleasure.
Thank you.
Thank you.
Members, any other members are having any clarifications? Please do not hesitate, because we are having a great master in that subject. Hello, friends. Unmute yourself and ask your doubts or clarifications. Is very good opportunity, because we cannot get Sudhir gar time. Members, please do not hesitate to ask any type of clarification. He will clarify all your doubts regarding the indirect taxes.
Sir, I have doubt about the GSTR 9. Can I ask?
Yeah, please
Yeah.
tell me, madam.
Yeah, this in this table 6, we are giving it is as per 3B, is it not? But ITC in table 6 is as per 3B.
As per 3B, yeah. What has been
Okay.
availed in GST and 3B?
So there, the details what we are supposed to input or reconcile, should we put there as what we have availed as per 3B only, or as per book? Suppose the
As per
input
3B
as
only.
per books is
As per
greater
3B.
than 3B.
Books is
should be-
greater. Books is greater, you cannot do anything. In 9C, the difference will come. In GSTR 9, you have to take as per 3B. That will go to GSTR 9C.
Okay.
GSTR 9C, you will compare it with your book credit. If book credit is more than your 9C, nothing to be paid. But you will show the difference and you will give a comment. Missed availing the credit, availed in the books, missed availing in 3B.
Okay. Sir, one more thing here. One more issue is, suppose in table 8A, it is as per what is coming there is as per 2A.
That is only information purpose. No, there is nothing else.
Yeah. So
it is not
this
taken.
now, if 2A is less than 3B,
2A is less than 3B, nothing to worry. If 2A is more, 3B is less. To that extent, it gets lapsed.
yeah, but if 2A is more and 3B
is less, then lapse.
than 2A is less than 3B is more, then
Nothing
show
to worry.
negative figure, na, sir?
Nothing to worry. Yeah.
Nothing to worry. Okay.
Yes.
Just leave it as it is.
Leave it as it is. You are going to get a notice. they're going
Yes,
to
yes,
tell,
and
okay,
then
why
go on the
2A is
basis
less
of
and all those
invoice.
things. Then yeah, I told all those things. Now up to January, 2A is not relevant at all. Only from
Yeah.
January, the 2B condition is there. So till then, no condition. So this is the invoice. I'll be eligible to take the credit. All those things.
Oh, we give a next suitable explanation and close it.
Yes, 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 yes.
Thank you.
Good, sir. So if no more questions, we can close, Chairman, sir.
Oh, that. Sir, members, any questions are there? Please. Sir, Sudhir garu, that your deliberations are excellently well, sir.
Thank you, sir. My pleasure.
Again, that please send the PPT also, sir.
Sure,
And,
I'll send it.
and the another thing is that we will again physical class will once you have to come, sir, Visakhapatnam. So
Looking forward, sir.
yeah. So because in the physical mode, everybody wants to ask so many clarification, so many doubts.
Yeah,
Sir.
yeah.
So that.
So we are having one tomorrow in Hyderabad. The
Acha,
first,
acha, acha.
after this third wave, first one is happening tomorrow.
Okay, sir. That we also plan, and you
Yes, yes.
please give your time. That is we will
Sure, sir.
and it's direct access.
We'll do that, sir.
So excellently well, sir. Thank you very much for
Thank you, sir.
taking our invitation, and you have deliberated and these GST amendments very clearly. Thank you. Now I request our Secretary Sri Anirban Pal, please propose vote of thanks, sir.
Greetings, dear members, and a very warm welcome to this to the end of this session. It's always a pleasure for us to hear to Mr. Sudhir. He's been visiting our branch both on online as well as offline mode, and we are very well abreasted and updated with the latest amendments of GST today. And he has been so very diplomatic in certain areas of the laws where there can be hardship or difficulties upon the assessees, and he's also informed us about the challenges in terms of the filing of the returns and all. We are very thankful to you, sir. We will be also looking forward to the notifications under the GST law, whereby all these amendments would be, enacted. We thank you very much for having accepted our invitation and having attended this webinar and addressed the members. As our chairman said, probably we will set up another meeting in a physical mode where we would like to interact with you on a more personal level. Thank you very much, sir.
Thank you, sir.
Dear members, just to keep you updated on the upcoming events, we would like to inform you that we are planning a couple of physical sessions on bank audit, because the bank audit session is nearing. In the month of April, we will have to again start the branch bank audits and the central and the zone level bank audits, where this year we might have to physically attend the branches and visit the branches for the audit. So we are going to conduct 2 physical sessions for the members, and we are also planning on one workshop both for the members and another workshop for the article students who would be our ears and eyes for the sessions. We will be sharing the details of the sessions shortly and communicating them with you. We thank you very much for your patient hearing, and over to the chairman. Thank you.
Sir, one more small announcement is there, sir. My dear members, on 26th, there is another webinar is there, and it is regarding the cryptocurrency and the digital currency and digital assets. So please block it on 26th, sir. So, my dear members, please tell your friends. Some of the friends may not be here, so please ask them also to block the date of the 26th evening. We will meet on 26th evening.
Who is the speaker, sir?
Yes, sir.
Gopal Krishna Raj garu, sir.
G. Gopal Krishna Raj garu, Chennai, sir.
Good.
Sir, on that day,
So thank you, sir.
might have attended on this 21st. That one-time fees we have made it physical because we have to conduct the physical meetings. So more physical meetings, and we made it 6,000 one time and 3,000 for these people and new people, new practicing chartered accounts below 2 years. So please, I recommend more physical meetings. That's why we have to enhance these fees. Thanks a lot. Thank you very much, sir. Thanks a lot, Sudhir, once again. Because
Thank you, sir.
our
Thank you, sir.
honorable- Thank you very much.
Thank you very much, sir.
Thank you, sir. Thank you, sir. Bye. See you soon. Bye.
Sudhir garu, namaste. Bye
Yes,
bye.
sir. Namaste, sir. Thank you, sir. Bye, sir.
Vizag వచ్చినప్పుడు చెప్పండి సార్ కలుద్దాం.
Sure, sure. That's that.
Okay,
Mostly
sir.
18th March I am there. Mostly
Oh,
18th
good.
March. Yeah.
Sure. We'll meet. Just give a call.
I'll do that. Thank you.
Or else tell Anil so that we can meet together.
We'll do that. Yeah.
Okay, Andy. Bye, Andy. Thank you very much.
Thank you.